Hello and welcome back to Academic Scope. Today we're going to cover topic 1.1 in OCR Economics GCSE, the main economic groups and the factors of production. So, the specification requires you to know how to explain the role of the main economic groups, consumers, producers and the government, including their interdependence, and you must be able to explain the factors of production, land, labour, capital and enterprise, including how they might be combined. Notice how the two command words are explained. This means there are no 6 markers that can be tested on this topic. This is because the only 2 command words for 6 markers are evaluate and analyze. So, the main economic groups: consumers, producers and the government. On the screen now you can see the definitions. I'd highly recommend you memorize these. Consumer is a person or organisation that directly uses a good or service. A producer is a person, company or country that makes, grows or supplies goods and services. A government is a political authority that decides how a country is run and manages its operation. It sets economic policies and is often elected. Now, 2 important definitions you must know in relation to these are goods and service. A good is a tangible product and a service is an intangible product. So, the government, which we mentioned earlier, has 4 macroeconomic objectives. All the policies it sets and the decisions it makes are on account of achieving these objectives: economic growth, low unemployment, fair distribution of income and price stability. So the government looks into society. Its revenue income is received from sources such as income and corporation tax. Income tax is tax levied directly on income and corporation tax on the profit of firms. Government expenditure is how government uses its income in order to fulfill its role. For example, this could be social protection such as benefits or money spent on education, military spending or the NHS. Interdependence. This is a key word that's directly mentioned in the specification, so you must know this definition. Interdependence is where one group responds to the actions of another group. The decisions an individual consumer, producer or government take all contribute to the final choices made on how an economy uses its resources. The 3 main economic groups interact in many ways. These are all examples of how consumers, governments and producers interact with each other, and you only need to know around 2 of these, as the maximum you can be asked on this is a 2 marker. Feel free to read on the screen and pause the video. Now, for the second point of specification, you have to know the factors of production: land, labour, capital and enterprise. Land is a factor of production that is concerned with the natural resources in an economy. Labour is a factor of production that is concerned with the workforce of an economy. A capital is factor of production that refers to human-made aids to production. And enterprise, the factor of production that takes a risk in organising the other 3 factors of production. The person who takes a risk is known as an entrepreneur. The factors of production are resources in an economy that can be used to make goods and services. So, this table shows the explanation and reward for each factor of production. The reward for land is rent, for example when you rent a house, or when you rent a field of land to grow crops on. Labour is wages, when you work you receive wages. Capital is interest. The interest is the payment made to an economic agent for borrowing money in order to buy the equipment. For example, if I take a £10,000 loan from the bank to buy some machinery, I'll have to pay the loan a percentage of that loan as interest. And finally, enterprise is profit, what is left off from revenue after costs. Thank you for listening to Academic Scope, and I hope to see you on the next content, chapter 1.2, and get ready, because we're going to be uploading videos nearly every day with high quality specification focused notes. Thank you.